Joining me is Feroze Azeez, Deputy CEO, Anand Rathi Wealth. Feroze, hi, lovely chatting with you. Lovely to have you on the show. The sentiment has turned since we spoke the last time. We saw a very smart rally and recovery from lows coming in. Of course, there are bumps on the way. This auto tariff news, it was expected to spur some bit of a sell-off after yesterday's weakness, but we've digested it pretty well. Looks like it at the current juncture, because even the mid-cap index has edged back into the green. Do you think the worst on the global front has already been priced in the kind of sell-off that we had seen a week back? Or would you say that there would be still some more hiccups to come as we step into the April 2 deadline?
Good morning. It's always a pleasure to talk with you, Nandita. Like you said, the markets have absorbed this surprise reasonably well, as we see today. Even the broader market is holding up reasonably well. But if you look at how the future is stacked up, I personally think that markets had recovered because they were oversold. All the three participants, if you look at the FII, DII, and the retail, by which I mean retail and others come as separate categories, which is corporates, HUFs, and stuff. All these three categories, if you dissect them in terms of demand and supply, because markets are operating in a demand supply forces because there are no corporate results. So coming back, FIIs have reduced their selling already. That implies that they've already sold what they had to sell in anticipation of the bad global news, which is trickling down for the last 3-4 months. So 78,000 in Jan, 40,000 crores in Feb. So far in March, they're about 16,000 crores negative only. And on the future side, also they've short enough. They'd gone to almost 85% short and 15 long. Now that because of some short squeeze, they've come to almost 63%, 64% short and 36% long. To cut the long story short, so I personally think we are in an oversold territory. I don't think large falls are possible or imminent unless there's some fresh round of news and in turn some selling possible on the domestic side. I don't see too much pain left in the market, even from a short-term standpoint.
Sure, not too much pain left in the market, and that's sounding like music to the ears. But since we are talking about Trump, just want to ask you one question. Every other day, there seems to be some headline coming out of US in terms of tariffs, right? And now the latest one being we will be very lenient with reciprocal tariffs. Would you expect leniency, or would you expect some bit of a higher tariff for India? I mean, how do we, from the Indian standpoint, look at this deadline? How fearful should one really be?
I personally think they shouldn't be fearful at all. If you dissect all what Trump says and what he actually does, he does a lot lesser in terms of harshness when it comes to economic policies as much as he speaks. So he's a very good negotiator, I would say. So I personally don't think it is going to be an event which you will even have to speak about in 2 months from now. So point one. Point two, anything material cannot change unless some larger sectors with heavy weights can get impacted. You see banking sectors independent of any of the global news, and I think they're more domestic driven in terms of delinquency rates, and the global economy doing well is when their NPAs are in control, their NIMs are okay. So I think 27% is banking, and that's at the 2 sigma lower than its mean and median P's for the last 10 years. So that implies that there is going to be buoyancy because the largest sectors is not overvalued. Then third point is, if you look at the extreme sectors which have delivered almost 41% negative growth in EPS, which is the oil and gas, it had delivered the Nifty oil and gas sector had delivered 930 rupees earnings in the same 9-month period, and this year they've delivered only 546.6. That implies a 41% degrowth. That's not a heavy weight. And on the other side, the capital market index has delivered 40% growth in the first 9 months vis-a-vis the same period last year. Both these sectors which are operating at extremes are not heavyweight sectors. So I personally think the market swinging has not been too much. If you look at this financial year, people keep speaking about volatility, and I don't know where this fear comes from. The highest level of Nifty is 26,200. The lowest is 21,885 on a closing basis. This is the tightest range a largest index of a country can operate.
Sure, but I just want to point out some data, new SIP registrations have dropped. There's been some signs of slowdown in equity mutual fund flows as well. Uh, would you say that this was temporary and now here on, since we've seen a good recovery, this will change?
Yes, some degree of SIP churning has happened. If you look at see what has happened is SIP closures are high, gross is also high. So net is a little dampened. I agreed. Point one. Point two, if you look at the SIP absolute number of 26,000 crores holding up, that's a great sign. I think Indian retail has been far sharper, far smarter in terms of controlling their emotions than HNIs. If I was speaking to, in fact, I was speaking to some very large asset management company AMCs who were traveling with us for one of our offsites, and everybody was telling me that HNI redemptions still came in Jan and Feb, but retail redemptions didn't show up. That's point three. Point four, if you look at the small cap inflows, which is a great barometer of a sentiment of a larger Indian household, we got 3,700 crores of positive inflow in February, which shocked me because that could have also been a minus 20,000 crore number, but it was a positive 3,700 crore number, which was the third highest for the financial year, in spite of the super dip of Jan and Feb in the small cap space. And yesterday's number, day before yesterday's number, which we track algorithmically, was a 220 crore positive in the small cap space. So I personally think Indian retail has acted far more sharply, controlling their recency bias and emotional drain which markets corrections bring to one's mind.
Sure. Feroze, couple of more questions then. What do you do with defense now? There's, spate of good news surrounding defense names. Of course, there's been the 54,000 crore rupee nod from the, Defense Acquisition Council. Of course, European companies also ramping up their defense spending, so that would translate into more business for Indian players as well. And we've seen a good resurgence in some of these names. What are your thoughts now on defense? Because they've also seen a fair bit of correction. So now, do you think it's a good time to look at these stocks from a portfolio standpoint?
Yes, Nandita, see, what is the attribute of defense is defense as a sector works more on information than earnings. That's the reality. It goes ahead of earnings or it lags behind earnings. So when you're playing defense as a sector, which is a high beta sector, what you have to keep in mind is if there is a series of good news coming in, you have to have lower free float stocks. If there is a series of bad news coming in, you have to have higher free float stocks. So that's the strategy you'll have to play on the defense as a sector. That's point one. Point two, I personally think defense in certain pockets has created some degree of good valuation, especially the higher free float stocks have corrected reasonable and they've not rallied back up with some degree of positive news. And that's so you have to be very selective is the net point I'm trying to make in defense as a sector.
And what do you do with autos now with this tariff announcement? Autos already have not participated in the up move that we have seen in the market recently. Would you avoid autos now completely?
No, I think I will not avoid autos. It depends on my time frames. See, if there is, my time frame is 3 months, then definitely you have to avoid auto. If you're looking at sectors from a perspective of owning them as direct equity or mutual funds from a 1-2 year perspective, then auto is a great sector because it delivered 9.1% earning for the first 9 months, and it has not participated in the rally. So I personally think large cap auto names have merit, and I think they've been beaten down, and there is a reasonable pessimism priced in already. So from a 1 year standpoint, auto would be a good pick because the last quarter results are also expected to be good, and a 12-13% growth for the full year is possible in the Nifty Auto Index. So I would say 1 year auto is definitely a pick.
Okay, auto is definitely a pick with a 1 year time horizon. But with that, Feroze, I'm afraid we are running out of time. Would like to thank you for taking our time and joining in. I wish to have more conversations with you in the future and longer ones at that. But for now, would like to thank you for joining in this morning.
Thank you, Anand.